For one analyst, commodity prices generally are in slow demand, with the upside looking more promising over the longer term. Copper continues to buck the trend though, especially in China where the housing market remains resilient, with millions of houses expected to be built over the next 3 to 5 years.
They consume more than 40% of global mine supply. And 40% it's very, very much China driven. And on top of that, obviously, US, Europe, the other areas, the growth rates has kind of stabilized. China important structurally also. China does not produce enough copper.
In the past, South Africa was known for its gold production. It's come down in terms of the amount of gold that it does produce. But it appears that the gold price is supported by something else.
We think that China is underinvested in this metal. We do think the physical demand and demand shift from west to east will continue. And once U.S. monetary has stabilized and normalized, we do think that gold will continue to grind higher. We think long-term price for gold is closer to 1,500 than 1,100.
Despite the fact that the platinum sector is under a bit of duress and stress at the moment, there is a longer-term view, and it's about stockpiles.
We do think that quite a lot sits in the US, quite a lot sits in Europe. We think that that could be up to around about 3 years worth of consumption in terms of inventory. Not all of it's of course available to the market. Some sites sit with fabricators, some sit with the auto guys, some are in ETFs.
The commodities market is an interesting one. It's a geopolitical play and it depends on your worldview. And if you're interested in platinum, copper or gold, you need to make that call. But it is a long-term call. I'm Angelo Coppola for CCTV in Johannesburg.